Over the medium term, the primacy of price stability embedded in our flexible inflation targeting framework provides the anchor for exchange rate stability. These are the 2 points which I mentioned. I would now like to mention the third point. Third, our interventions in the forex market are based on continuous assessment of the prevailing and evolving situation from the point of view of the approach which I just explained. The aspect of adequacy of forex reserves is always kept in mind. The umbrella, as I had said earlier, continues to remain strong. During the pandemic, forward guidance gained prominence in Reserve Bank's communication strategy. This was helpful in anchoring market expectations. In a policy tightening cycle, however, it is arduous to provide consistent forward guidance, particularly in a highly uncertain environment. In fact, forward guidance may even destabilize financial markets. Questions are often asked about the peak and terminal rates in a rate hiking cycle or in a rate tightening cycle. Without venturing into any forward guidance which can be hazardous in the present context, I would like to state that our actions will be carefully calibrated to the incoming data and the evolving scenario without being constrained by conventional or any textbook approach to policy making. Let me now focus on the external sector. The current account deficit for the first quarter 2022-23, and that was released last evening, is placed at 2.8% of GDP, with trade deficit at 8.1% of GDP. Various leading indicators, including global PMIs, point to weakening of global growth momentum and downside risks to global trade. India's import growth, though decelerating, outpaced the export growth. Consequently, the trade deficit remained high in July and August. Services exports continued to grow at a robust pace amidst resilient demand for software and business services and modest recovery in travel services. On a balance of payment basis, that is on a BOP basis for which data were released yesterday, exports of services grew at a robust pace of 35.4% year-on-year during April-June this year. For the same period, remittances rose by 22.6%. The net surplus on exports of services is expected to partly offset the higher trade deficit. So as you can see, both services sectors have grown at a robust pace of 35.4% and remittances have grown by 22.6%, and that is why I am making the statement that the net surplus on exports of services is expected to partly offset the higher trade deficit. From the external financing side, net foreign direct investment, that is FDI, improved to 18.9 billion in April-July this year from 13.1 billion a year ago. Foreign portfolio investors, that is FPIs, have returned to the domestic market with a net inflow of $7.5 billion during July to September after an outflow for 9 consecutive months. India's foreign exchange reserves now stand at $537.5 billion as on September 23rd, and this compares favorably with most peer economies.
बता दें कि मनी कंट्रोल पर दिए गए विचार एक्सपर्ट्स के अपने निजी विचार होते हैं। वेबसाइट या मैनेजमेंट इसके लिए उत्तरदायी नहीं है। यूजर्स को मनी कंट्रोल की सलाह है कि कोई भी निवेश निर्णय लेने से पहले सर्टिफाइड एक्सपर्ट की सलाह लें।